What's going on, guys? It's me, it's Josh, RSI guy, and I want to start off by saying I do apologize for this huge delay. It's been, 4 weeks, almost a month basically now. I just had a bunch of school stuff, college stuff, due dates, assignments, stuff like that. But yeah, I just want to start off by saying I apologize, and I do have a set date on when I will be uploading. Every Friday, I would upload at least one video a week. I say at least because I might do more here and there, depending on if there's huge market news, stuff like that, so I never know, but for sure at least one video a week on Fridays. It could be anything from a market recap, trade recap, news, or just tips and tricks that I do and I implement into my trading on a daily basis. So that's set every Friday, so expect that. You probably already know the title of this video. It's going to be how to invest your first $100 into the stock market. Now, there's multiple ways you can invest. You can invest straight dividends, growth companies, or you can have a mixture, is what I do. I have a mixture of both dividends and growth. We're going to start off by explaining what both of those are. A dividend is whenever a company pays you for owning their shares. Doesn't matter how many shares, how little, how much, they will pay you. If you have 1,000 shares of that company, they will pay you this amount for those many shares. And even if you have Robinhood, you have fractional shares. If you own like 0.00157 of a share, they will pay you for that. And that's what's really cool about Robinhood. You can get fractional shares, and I will leave my link down below. We can both claim a free stock. Boom. And then a growth stock is something that, it's basically in the title, something that grows constantly. A few examples is Apple. Everyone owns Apple. Everyone has seen an Apple device. Everyone knows about Apple. It's a company like that. They've been around for a long time. They're constantly putting out new stuff. Everyone knows what it is. It's been around for years, and it's probably not gonna die until, something surpasses that company, which is very rare. And another example would be Tesla. Tesla is constantly putting out vehicles. They're constantly adding to the vehicle, new upgrades, and especially they got battery day. They're going to introduce a ton of new stuff. So that would be another growth company. There are so many growth stocks that you can buy, and it's a lot of companies that stuff that you own and you probably don't even know about it. Probably like your toothpaste, your toothbrush, your car, your shoes, companies like that. That are constantly growing. Everyone knows the name, and they've been around for years, and they probably won't go away for a long time. That's a good growth company. Now here we go. How to invest your first $100. So now this is all up to you. It is optional, and you don't even have to follow these. You don't have to get a dividend. You don't have to get a growth. You can just put it whenever you want. It's up to you. But it's good to have a guideline, like a guidebook, something to go off of, so you know where to keep putting your money if you do continue to add. Because a good plan to do is to add a little bit, a month, a week. That's also optional. For me, at the end of the week, if I have a little extra cash, I throw it in my Robinhood, put it in some Tesla, put it in some AbbVie, stuff like that. AbbVie is a dividend stock, a really high dividend yield stock. And then Tesla, yeah, it's Tesla. I'm gonna tell you how I spent my first 100 on my Robinhood account. Now, I split my Robinhood into two. I have dividends and I have growth. At the moment, I have 3 dividends, 2 growth stocks. At the moment, I'm gonna continue to expand and add to those. And at the moment, I have AT&T, ticker symbol T. I have SPHD, which is a S&P 500 high dividend yield stock. SPHD is the ticker. And then I also have AbbVie. That's also really good high dividend yield stock, and the ticker is ABBV. Now for my growth stocks, I have Apple and I have Tesla, and I recently added a little more to Tesla because of battery day. Now, why did I buy those 3 dividend stocks, and what makes a good dividend stock a good dividend stock? Now, this is broken up into different parts. How long have they been there? Will they continue to grow? Are the earning reports good? How big is their dividend yield? A big dividend yield means you will get paid more. Some of them are 6, 5, those are really good. And the last thing is, will they cut their dividends? Now, this is a big thing, especially during this time, during the C virus. I can't really say it. You know what it is. But yes, when they cut it, that's a really bad thing for their company. And usually when they cut it, they won't put it back for a little bit until they get that money back up. Make sure when you invest into this company, especially if you're investing it to get that dividend, make sure that they won't cut that dividend. And you can look at that by news, you can look at their earnings, they will explain all that there. Now the next thing, what made me invest into growth? My growths are Apple and Tesla at the moment. Now I'm gonna start off with Apple. Apple is a very known company around the world. Everyone knows Apple. Everyone has either seen the product, owned the product, or heard about the product. They're almost in every store you see. They got, Apple phones, Apple cases, AirPods, headphones, stuff like that. They were known all over the place. Another thing, they are constantly putting out new things. They just had an announcement about their new phone, new iPad. They're gonna be doing this, that. They're moving and they're bringing new things. So that's a good thing. New things means new opportunities. New investors are liking those new opportunities. So therefore it's gonna keep growing, growing, growing. And also, Apple has been here for so long. That's another reason why I invested into it. Now, they might not pay me for having it, but just me owning it and it for it continue to grow, that's paying me. So that's also really good. My other one is Tesla. Tesla is also a really big company now, and they've been blowing up since, Elon Musk has been putting out all these cars. He's constantly adding new things to his company. You got SpaceX, all this and that. With the upcoming event, Battery Day, he's going to announce a ton of new things for batteries, for cars, maybe a new car, stuff like that. But he's constantly adding, innovating, making stuff for his company better. And that's what investors like. Investors like when a CEO knows how to do stuff. They will put their money to do. Investors will put their money to anything that when a CEO knows what he's doing, when he's adding new stuff, when he's making and growing the company better and better. That's why I bought that company, and that's why it's in my portfolio. And a lot of people get sketched out and messed up on how to continually add to their long-term account. Long-term accounts should be priority when you want to start trading or investing, because especially traders, they use up all their money trading. Yes, they might win, they might lose, but they don't have a constant, growing aspect in their account. It's constantly just boom, 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 boom. With a long term, it's just, straight up, maybe a couple bumps, straight up. That's what's good, and that's why people need a long term. And so what people don't know is how to grow that long term. It's not just putting in $100 and boom, let it set. Yes, you can do that, but adding to it constantly is what is also constantly growing it, And so having a plan to put money to that account is also really good. I heard a lot of people, at the end of the month, they get up $100, $1,000, depending on your situation. Every end of the month, they put a chunk of money and they split it between however companies they have or what they want to buy. For me, at the end of the week, I usually put whatever leftover money I have, and I split it. I put in some dividends, I put in some growth, and I let that grow, and I set that and do that every week, every month, however. And that's what starts getting you to grow your account. It's basically a bank account that's constantly moving, changing, and growing. Especially if you have dividends, when the company pays you, that's good. Your account's constantly growing. I hope this video made sense. I know I didn't really go into depth on these topics, but really a lot of this is research. You have to figure out what you want to buy, how you want to spend, and what's good for you. The stock market is based on you. You can't really go off someone 100% on your investing, on your buying and selling. It's all up to you. Do your research, know what you're doing, and then you'll be fine. But my name is Josh. I'll see y'all later. Alright, what's up guys? It's Josh. I want to give y'all a little more of a heads up on how to actually claim that free stock. Both I and you get one whenever you use my link, my referral code. So when you click that link in the description, it's going to take you to Robinhood, the website. It's going to look a little something like this, except minus that because you won't have anything in your portfolio at the moment. But you're going to make an account. You're going to put in all your credentials. It's going to ask for your ID, social, stuff like that. So it's making sure, you are who you are. And then once you do that, I believe you click on free stock. There you go. You're gonna click on free stock, and it's gonna take you step by step on how to actually claim the free stock. And if not, it might actually automatically give it to you whenever you make your account. I'm not 100% sure, but whenever you do, click the link in the description where me and you are gonna get a free stock.